Hey everybody, today is Friday the 28th of February 2020 and the market got smashed here this week. Down 11% for the SPY. The Dow was down 12%, oil 15%, financials 13%. Bonds were up and volatility was up as well. So let's take a look here at the charts. If you've been looking at what I've been talking about here the last couple days, it's been about this volume weighted average price from the December of 2018 low. We hit it in June of last year and then we hit it again today. And that's where basically the market had this volatility and buyers ended up trying to fight for control. We still lost ground on the day, but this has been a prior area of support as well. And if you recall back to last Friday, I had mentioned that the number one indicator of intermediate term trend that I follow is the direction of the 5-day moving average. And we get below the 5-day moving average and make a lower low, that my outlook turns intermediate term bearish. I certainly was not expecting a sell-off like this. I don't think anyone was. But the point is, I always refer to it as the intermediate term trend is guilty till proven innocent while we have a declining 5-day moving average, and that's where we are now. So what we've had all week, for the first time today, we did close above the daily volume weighted average price. That's the first time it did that all this week, is to close above its daily volume weighted average price. And we also got up to the 2-day volume weighted average price. So clearly, there are some buyers coming into this market, but it's interesting that it came right up to that 2-day volume weighted average price. If you saw, I did outline that on Twitter this morning. So where are we now? Well, we have made a higher low and a higher high here. So it turns it more neutral. We're still bearish because we're below the declining 5-day moving average, but we've gotten so oversold that a bounce seems obvious to, at this point. The volume weighted average price from the peak is up near that 5-day moving average right now at about 310, and it's coming down rapidly. I mean, it'll continue to decline like this. So I would be looking for that as a place that maybe next week we bounce up to. And, one potential scenario is we could, I don't know how we get up there, maybe like this on Monday, get up towards that level. And then, this is, again, just a possible scenario. I'm not outlining what I think will happen. Pull back and then create, a little inverted head and shoulders pattern down here. And then maybe run up a little bit higher to some bigger levels. And then if you have doubts about your holdings, that would be a great time to lighten up a little bit here, in particular if you're an investor. We'll see if that 200-day moving average offers any supply. The NASDAQ bounced right from its 200-day moving average today and didn't come anywhere near that volume-weighted average price from the December low. What we want to do is take volume-weighted average price levels from important lows. And in this case, when we draw one right here, let's just color that something obnoxious so we can see it. See the volume-weighted average price from this low lined up with the 200-day moving average just above prior resistance, and that's where the buyers turned up in here today. So this, semiconductor, these aren't the semiconductors, of course. This is the NASDAQ, and still we're right, with the 2-day volume weighted average price, we're just above it. We're well below the week-to-date volume-weighted average price, which is, of course, right off of this level. And, that now makes this a potential area of resistance for next week, at least if we're going to see, maybe something like this initial rally somewhere into this range, maybe chop around, shake people out, and then perhaps continue to move higher. One thing for certain is we will continue to see more volatility next week. Russell 2000 was interesting. It was looking more bullish than the rest of the markets last week, but we were below that declining 5-day moving average coming into the week, and that continued to provide the path of least resistance, which of course remains lower. So that gap lower really ruined any opportunity for the Russell 2000 to bounce, and we cut through all the key volume weighted average price levels and moving averages, which is why we look at them as a level of interest. And instead we came down and undercut this low just briefly, and that's where the buyers emerged in here today. So a bounce up towards 154 seems reasonable to me. We'll see if the market agrees, but in that, here's the volume weighted average price from this gap. So this seems like a highly likely area for the resistance to show up, for sellers to emerge, that is, next week. Semiconductors came down to this prior resistance, as well as the 200-day moving average and the volume-weighted average price from the June low. This probably provides a level that it could bounce from, and maybe it does something like this and then comes back down and retests and perhaps even goes down here. Again, I think that it's probably going to be one of these rallies that you want to use to lighten up longer term holdings, especially if you have anything you're holding at a loss. The volume weighted average price from the December low was hit along right with that 200-day moving average in the biotechs. You can see that this volume weighted average price from the October low had no support whatsoever. Again, these are levels of interest where we look for evidence that the buyers are regaining control. And in the biotechs here, let's just look at a 5-minute time frame. You can see that here's where we cross back and forth above and below the VWAP all session, and then finally, right at the end of the day, all of these markets really rallied higher, and you can see we've still got some strength after the regular session close. We closed at 296 and a quarter. Here we are at 297 and a quarter. Anyways, over to the financials. This group really got smushed pretty good, right down to an important level of prior support. It undercut that volume weighted average price from December of 2018. Rally maybe up towards 28.75 before we see some selling emerge once again. Sellers are in control of these markets. They are in downtrends, so be careful with them. There's really bounce. You've got to be looking at them as they are bounces. Even gold got hit here real hard today. The GDX actually broadcast that yesterday. The weakness in the GDX fell before so the gold miners fell before gold itself. Some of the names recently, it's some of these coronavirus plays. At Alpha Trends, we had this one at $3.25 just on Tuesday. We got stopped out of the balance of this one today. We had 2/3 open. 1/3 we got stopped out at $34 and the rest at $27. We bought it at $3.25. And again, if other people are bringing you these ideas and keeping you out of trouble by broadcasting ahead of a sell-off, that they're bearish, like I did right here, go back to Friday's video, go look at alphatrends.net, go look at Alpha Trends on Twitter, then stick with them. But if you want someone who can objectively look at market trends and the way that cash flows throughout the markets on shorter term time frames for at least a portion of your swing trade capital, then I would suggest you come take a look at alphatrends.net. Thanks for tuning in. Hope you have a good weekend.